where are the investment opportunities in the market? I think the mistake many people make is when they hear cryptocurrencies, they think Bitcoin. They think a cryptocurrency is an asset that is looking to replace the dollar, the rand, the pound, or globally termed as fiat currencies. Well, that is an opportunity in the market, but that's just one of many opportunities. And what we'll be doing is dissecting the various opportunities out, in addition to a cryptocurrency that's looking to replace fiat currencies. We'll be looking at other opportunities that are in the market. So to start off, I'm going to hand over to Ndoni. He's going to take us through cryptocurrencies.
Excellent. Thanks, Johns. Okay, so that's a great foundation to start off with. Nice explanation from John T, showing how blockchain provides the infrastructure for the crypto market. And there's a wide array of different applications, but the first and most obvious application of a blockchain is to create private currency or non-sovereign currency. So if you, like me, are less than the age of 50 years old, we've only ever lived in the era of fiat currency. It's the only type of money we've ever known. But previously, we lived on a gold standard. People used metals as money. And even longer before that, people used all sorts of different objects as money: cattle, salt, shells, all sorts of varying and interesting examples. But now, with the advent of decentralized networks and cryptocurrencies, we now have these competing networks that are also acting as money. Just some examples here, three of the biggest examples currently. Bitcoin, obviously, everyone has heard of that, is aware, recognizes it, was valued at $1.5 trillion when the market was at its all-time high, but earlier in the year, recently has just dropped under $1 trillion market valuation. Binance is another coin, currently valued at $94 billion. And Tether is another interesting cryptocurrency use case where it doesn't have its own supply schedule. It's simply designed to be a stable coin. So for every Tether in existence, there's supposed to be an actual physical dollar backing it. And this is useful for people who are disconnected from banking networks and find it difficult to transact in the by traditional means. Now, all they need is an internet connection, and via that internet connection, they can essentially use the Tether rails to transact anywhere in the world using dollars. Next slide there, please, Johns. Thank you. Okay, so how do we evaluate which cryptocurrencies are good, which cryptocurrencies are useful, which ones we think will gain adoption, etc. And at the moment, there's a lot of varying opinions and many different valuation models. But for me, I think it's best to synthesize a mental model against which we can compare every single token that's competing to be a currency. And historically, this is how economists evaluated all different types of money that existed historically. So these are tried and tested, and it applies to any token or object that you can think of that could possibly be used as money. So let's go through some of these characteristics and see how cryptocurrencies match up against fiat currencies and commodities. So characteristic number one, scarcity. Again, this is quite obvious. I think humans inherently understand anything that is rare or scarce is valuable. And against this characteristic, cryptocurrencies far outperform fiat currencies. As we know, we've got central banks. Pretty much every central bank around the world is inflationary. They exist to print more money and bring more money into circulation. Especially since the great financial crisis in 2008, and now with the COVID health crisis, central banks have ramped up their printing even more to try and stimulate economies. And this is particularly bad for people who want to save in their national currency. So if I'm earning rands and I want to save my 10,000 Rand at the end of every month and put it into a savings account, if my savings account can't outperform inflation, then I'm, in real terms, I'm actually losing value and I'm not earning anything. Now, when we compare that to the supply schedules of cryptocurrencies, particularly Bitcoin, which has a fixed supply of 21 million coins, if you're a saver and you choose to save in Bitcoin as opposed to South African rands, you know that your value or your piece of that network cannot be arbitrarily diluted by some centralized body, because those rules cannot be changed as it exists on a decentralized network. So there's one obvious characteristic where cryptocurrencies outperform fiat currencies. Now, in terms of divisibility, another quite obvious characteristic, when you go to the grocer and you need to pay 1,000 Rand for your groceries, you need to be able to pay with currency that you can get change in or pay for low-cost items. Now, if you think in terms of gold and why gold isn't widely used as a currency, it's simply because it's not easy to divide and transact in it. If you rock up at Woolies with a bar of gold, that's worth 25,000 Rand, it's very difficult for you to shave off some gold shavings to come up with the right amount to buy your groceries. So they're quite an obvious characteristic as to why we don't actually use commodities as a medium of exchange. Transportability, another area where digital networks are far superior than the existing banking infrastructure or physical networks. So again, easy to use examples. Let's say you want to use gold to pay for an item that's coming from the United States. For you to ship that gold overseas across 2 borders and get it to the vendor that you're transacting with is very expensive, takes very long, and it's a very cumbersome process. Compare that to current banking networks. Some networks are very quick, but there's also very obvious limitations. Banks are closed on weekends. They're closed on public holidays. If you want to send an EFT or a wire transfer across borders, there are also additional delays and additional checks that you have to go through. Now, compare that to transacting with a cryptocurrency. It's pretty much at the speed of light, and anyone with an internet connection can send to anyone else on the globe, and it's practically instant. So there are very, very many positives and characteristics that cryptocurrency improves upon versus existing monies. Recognizability, again, that's pretty self-explanatory. Currencies need to be resistant against being able to being counterfeited. And as a vendor, you need to be able to receive a currency that you understand and that you recognize. Durability is another interesting characteristic and something that often gets overlooked. And I think a good way to think about this is look at the last 100 years of fiat currencies. And I think if you go down the list of all the fiat currencies that have existed in that time, a vast majority of them have either disappeared completely or gone through episodes of hyperinflation, where their value has essentially dropped to zero. And they have not, I think the average lifespan for a fiat currency is somewhere in the range of 24 years. And we've got very recent examples. We can look to our neighbors, Zimbabwe, and we know very well what happened to their currency. And there's also episodes of hyperinflation happening in Venezuela, Lebanon, Turkey at the moment. So these events are a lot more common than we would think. Now compare that to cryptocurrencies. Yes, they're very new. We only have a 10-year history. But if they succeed and their decentralization continues to grow, it's very likely that these networks can continue for hundreds, if not thousands of years. And then lastly, decentralization. Again, Jonty went into that and explained how blockchain operates in a decentralized manner as opposed to a central bank. That's kind of a sixth characteristic that we can now add into the mix when we are evaluating different currencies. Okay, so looking at Bitcoin and evaluating its performance over the last year, up 181% over the last 12 months, which obviously has been very good. And yes, that comes with a lot of volatility, but the last 12 months for the crypto market have been very, very positive, pretty much across the board. Now, in terms of liquidity, which is also a very important metric because people need to be able to transact in these currencies without delays or without any added friction. And from a liquidity point of view, we are seeing the market grow quite drastically month on month. For Bitcoin in particular, it trades on average around $5 billion per day at the moment. I discussed its scarcity, and it's strictly limited to 21 million coins. And the reason we can say that is because its supply schedule is regulated by the protocol and by each peer on the network that verifies that protocol. So unless there is a 99% supermajority of nodes that decides to change that limit, it's practically impossible to ever add more coins into circulation. Okay, another little tidbit about Bitcoin, and one of the pitfalls that often gets overlooked. When you are handling cryptocurrencies and transacting with them, it's very easy to make a mistake. These networks it's a new technology. There are certain nuances and certain areas where people need to level up their understanding before they can safely use them. And what we've seen in the short history of Bitcoin is that a lot of the loss in the space comes purely from user error and not being able to store their currency safely. So that's something that needs to be kept in mind. Okay, and then lastly, the overwhelming value in the space, in my opinion, comes from people who have a long-term view and see the long-term potential of this market. Infamously, cryptocurrencies are extremely volatile, and that's well understood. But the overwhelming trend is that adoption is increasing, and with increasing adoption comes increased value in these networks. And so there's a great chart that shows that the price of Bitcoin has never dropped below its 200-week moving average. So anyone that's actually held Bitcoin for a period of 3.5 years or more has never suffered a loss, even with all the volatility in between. Okay, so a great visualization of where the market started and where it is today. This is a 5-year chart of 3 of the largest cryptocurrencies at the moment. So we've got Bitcoin, Ethereum, and Cardano, and then the black line shows their combined market cap. So looking 5 years ago in 2016, you can see that these networks practically had a combined value of 0. The technology wasn't very well understood. It wasn't very widely used, and it had very, very little utility to individuals or anywhere in the market. So from something that was valued at 0, in a very, very short space of time, 5 years, we now see this market having a combined value of over $1 trillion. For these 3 assets, for the entire crypto market cap, we actually saw it go over $3 trillion in valuation earlier in the year, currently sitting at around $2.5 trillion in total market cap. And again, I like this snapshot because if we compare it to something like gold, which is a 5,000-year-old asset that everyone understood, and it's quite easy to invest in gold itself, that has a market cap of just under $12 trillion. So cryptocurrencies are about a quarter of that value. And if these adoption trends continue, I believe it's just a matter of time before crypto overtakes the size of the gold markets. Okay, right now, another comparative snapshot of how Bitcoin has performed against other markets. So in this visual, I've compared Bitcoin on a 5-year time horizon against major equities markets. So we've got the S&P 500 in red, we've got the JSE, and then I've pulled out Amazon and Tesla as 2 of the best performing stocks probably of the last decade. And not shown on the graph, but I have comparative numbers here as well of South African 10-year bonds and real estate indexes. And I think the key relevance of this graph is that over a 5-year time frame, nothing comes close to the returns that Bitcoin has offered. So Bitcoin returning over 7,000% in that time frame. The next closest being Tesla. Tesla 1,660%, and Amazon 316%. And then as soon as you move away from those 3, it's not really in the same ballpark at all. Gold very flat over the last 5 years, only 30%. SA 10-year bonds 4%. All the real estate index data that I could find shows negative returns over the last 5 years. So in terms of thinking of an allocation and how to put together a portfolio, I think cryptocurrencies are at the stage where it has to be considered to form to take up some percentage of a long-term investor's portfolio. Okay, so that's just a quick overview of the different types of currencies in the crypto market. I'm going to hand back over to Jonty, and he'll take you through some of the utility tokens.
Donny, thanks so much. Okay, so and Donny touched on cryptocurrencies as an investment. The second focus point today is utility tokens. Okay, so when you transact on the blockchain, there's a transaction fee, a cost that needs to be paid. But that cost isn't paid in rands or dollars or any fiat currency. It's paid in the utility token of that blockchain. So if Postnet in the example earlier was transacting or using the Ethereum blockchain, then any user of the blockchain would pay the fees, the related fees in Ether, because Ether is Ethereum's utility token. Let me give you an example which you can relate to. So if you buy shares on the stock exchange in South Africa, as I mentioned earlier, Straight is the central body that will confirm and register your purchase or sale of shares on the JSE. Straight charges a fee for performing that service, and that fee is paid in rands. But in the cryptocurrency world, on the blockchain, that fee is paid in the cryptocurrency or utility token of that blockchain. So if you transact on the Ethereum network, you'll pay the fees in Ether. If you transact on Cardano, you'll pay it in ADA. If you transact on Polkadot, you'll pay for the transaction in DOT. Now, this is very important because as an investor, you need to, if you believe as I do that blockchain or blockchain technology is really the future for many businesses, you need to ask yourself the question, which blockchain technology is going to be widely adopted? Now, if you have a look at the image in the middle, here we have the Ethereum network, and we have all these different businesses, or the correct term is protocols, which use the Ethereum network. So why is this relevant? Because the value of the Ethereum utility token is increased, or it increases in value for two reasons. One is adoption. So every single time you transact on the Ethereum blockchain, you need to pay in Ether. Now, basic demand and supply principles will tell you that the more people need to buy a certain object or item, price will go up because supply is limited. So that's very relevant in the blockchain environment. The more and more people transacting on the Ethereum network, more and more Ether needs to be purchased. Therefore, the price of Ether keeps going up and up and up. Then when businesses or protocols start using the Ethereum network, their users who transact with them also need to directly or indirectly buy Ethereum. So more and more, the usage of the Ethereum network will result in more and more Ether being purchased and the price increasing significantly. That's the one way. The second way is people like myself and potentially you. I see an opportunity to purchase the Ether as an investment case, because I'm seeing a huge adoption in this network, and I believe that the price will continue to go up and up and up. Now, if we have a quick look, the Ethereum network is valued at just under $500 billion. So that's its market cap. It's experiencing currently on average 1.2 million trades per day. So the volumes that are going through the Ethereum network is really, really high. And as an investment case over the last 12 months, the Ethereum network, as of November, went up just under 700%, which is really, really incredible. Regardless of volatility, I think the Ethereum network, personally, I don't think it could ever go to zero, given the amount of transactions that's taking place and protocols that are being developed on the Ethereum network. Other competitors is Cardano, which is around $44 billion in market cap, and Polkadot, which is around $27 billion in market cap. If you compare Ethereum to major banks globally, their market cap far exceeds many, which is a good sign for investors, given its wide adoption and interest from investors to invest. Okay, so we've dealt with cryptocurrencies as an investment case. the likes of Bitcoin that are looking to replace fiat currencies. We've then dealt with layer 1, which is blockchain technology, Ethereum, Cardano, Polkadot. And now we're going to move over to the protocols or businesses which use the Ethereum network. So earlier I gave you the example of Postnet. Postnet could be on a blockchain, but there are many, many, many businesses that are seeing huge volumes in trading, which are using various blockchain technologies. The first example I'm going to give you is Aave. So Aave is completely decentralized. If you are a cryptocurrency investor and you need some cash, maybe you need to renovate your house, and you really don't want to sell your cryptocurrency, well, what you could do is deposit it with Aave. Aave will hold your cryptocurrency as collateral, and depending on the cryptocurrency, give you roughly between 40 and 60% of the value of the cryptocurrency as cash, so that you can go and renovate your house. You then have an obligation to pay interest. If the cryptocurrency drops in value significantly, Aave will simply liquidate your position and recover the capital that it needs to service the debt. Or if you are sitting on cryptocurrency, you can deposit with Aave, and Aave will pay you interest. And that interest varies from 1% all the way to 15, 20%, depending on the cryptocurrency. The interest rates fluctuate significantly. So if you are in the market, you'd have to watch it. You'd have to watch the interest rate that you're receiving. But tokens like Aave have done unbelievably well. Currently, there's just under $250 billion deposited with Aave, and total borrowings is around 51 billion. But where the investment case is when you paying Aave interest, or when you're receiving interest from Aave, you're receiving it in a utility token, in Aave's utility token. So the more and more interest being paid or being received means that more and more people need to buy Aave in order to settle their obligation, as an example. This will then, again, normal demand and supply principles will result in the price of Aave going up. Or investors like myself will invest in Aave, because we can see that more and more people are depositing cryptocurrency with Aave to either receive a return or to raise some funding. Another example, this is an example of the interest rates as of last week. If you deposited USDT coins with Aave, you'd receive around 8.2% in dollar terms, which is really, really high. If you needed to borrow and you borrowed USDT coins, you'd pay around 10% per year. Again, it all depends on the type of cryptocurrency. Another example of layer 2 is Uniswap. So currently, if you are looking to transact with Aave, you can transact with any blockchain, and you sitting on Bitcoin as an example, Aave is an incredible protocol which allows you to deposit your coins, your tokens, and then exchange it for Ether, for a USDT coin, for Aave's coin, and it's an exchange. Its market cap is around $10 billion. Both Aave and Uniswap see enormous amount of flows, and they have a total of 0 employees working for them. Once the protocol is set up, it's all automated, decentralized. Where there are people working for these protocols is in development, potentially looking to launch version 2 or 3, but the actual protocol needs no human interference. So as a business, we see opportunities we see 3 opportunities in the market: cryptocurrencies as a form of investment, utility tokens, which are related to a blockchain, and certain protocols which offer people within the crypto ecosystem to potentially lend money, borrow money, or to exchange, as 2 basic examples. There are other opportunities in the market. There's yield farming, and yield farming, as I mentioned earlier, you can buy a cryptocurrency, you can deposit it with Aave or other protocols and earn interest. It is something you need to be really actively involved in. This is something that we're looking to launch as a business probably in Q2 next year, where effectively we can continue continuously monitor the market and see which coins are generating the highest interest rate, and then give investors really nice dollar returns. Another opportunity is the metaverse. So the metaverse is a virtual world. A good example is a PlayStation game where you can walk around, let's say Sandton City, and walk into a shop. If you need to buy or renew your MTN contract, you'll walk into MTN. There'll be a person on the other side of the counter. You'll engage with that person. You'll ask them questions. You'll walk around the store. You can sign the contracts and then wait for delivery. You would need a persona. This is me. This is my virtual personality or person. And there are a number of metaverses or virtual spaces that are being created. Facebook noticeably recently changed its name to Meta. It's investing $10 billion into this virtual world. And I think one of the real benefits is that you can work anywhere in the world in the future. All you need is a good Wi-Fi connection and a laptop, and you could be based on the coast or in a foreign country. But as long as you are able to connect to the internet and engage with your peers on the virtual world, you'll be as productive as being in the office. Another opportunity which is getting a lot of media attention is NFTs. An NFT is a non-fungible token. It's really a token which is in some cases takes a real world object and tokenizes it, or it's where someone has developed art, digital art, they've tokenized it, and that's been put onto a blockchain, which will then give the owner the absolute right to that image. I don't see huge value in digital art, but billions and billions of dollars is being spent on this art. As you can see, OpenSea, which is one of the biggest markets in the world, they've seen trading volumes as at November of $10 billion. So there is huge demand. I don't really understand the investment case. What I do understand is I think there's a big opportunity in NFTs, but outside of art. For example, in the medical industry, all your medical records could be digitized and put onto a blockchain, and that will allow any doctor anywhere in the world to access it, have a look at your information. If you do need the doctor, or if you're in an accident and they need your information, they'll go onto the blockchain, they'll pull your personal information. Other opportunities is really digitization of anything that needs to be registered. So your car, all cars could be removed from the government system, put onto a blockchain where you can simply confirm who owns it, all the details of the car. And if I want to sell it, well, I can just sell the token to a willing buyer. Similarly with property, it can be tokenized and very simple, efficient, and cost-effective to transact over the blockchain.